So with that, I request Gigi sir, ED and CEO Sa-Dhan to deliver the opening address.
Once again, good afternoon to all, and welcome to this important webinar where we are discussing about the Grameen credit score. First of all, let me thank the TransUnion CIBIL team for facilitating this webinar, and they will be making a presentation about the Grameen credit score concept and what they have developed under that. In fact, it says, I'm sure everyone will be eagerly waiting to know what this Grameen credit score is. We heard it first time in the last budget when finance minister was presenting the union budget, that they'll be developing a Grameen credit score. So as I understand, all the three credit bureaus were asked to develop the concept, and TransUnion CIBIL is here with us. The other two also have developed, like Equifax also has developed, as well as Griff Highmark has also developed how to work out or how to do this assessment. So first we'll hear from TransUnion CIBIL today. Maybe we'll also have a couple of other webinars subsequently, so that we can have a better understanding about how these credit bureaus are looking at this particular concept. In fact, as we all know that credit history is a major challenge many times for getting a formal credit. And one of the services, I would say, the microfinance institutions are doing is developing a credit score for the rural people, the poor people who otherwise do not have a credit history. So, but still there are a large number of people who are still outside this credit history, credit bureaus. So for them, how do we make an assessment? Maybe this could be an answer to that. We'll wait and hear from the CIBIL team. So I will not take more time. I'm also equally eager, like all of you, to understand and hear and understand what this concept is and how are we going together. First, we had some discussions in between with the CIBIL team while they were developing this concept. So we'd like to hear more from that. So once again, thank you for coming, and welcome each one of you for today's this webinar. So over to you, Dolly and team.
Thank you so much, sir, for this address. And we will straight away, of course, we'll go to Grameen Credit Score. What is it all about? And we'll just display our screen so that we can discuss in a better manner. So our screen is visible, right, sir?
Yes.
Yeah.
Yes.
So Grameen score, like as Gigi sir also mentioned, that this whole concept is started during the Union Budget 2025 this year. And it was announced that, we should come up with something like Grameen credit score. And the objective would be, in order to promote financial inclusion, we should have some construct like Grameen credit score. But this was the idea. But how to develop this? What is Grameen? This was, again, this concept and everything after a lot of deliberations, and also by the guidelines of our regulator RBI. So this came that, we should come up with Grameen score, and how would be the construct and framework. We will discuss that. So the sole objective here was to create the score will be targeted towards the Grameen rural borrowers, and based on the data which is available with TransUnion CIBIL on the consumer, which is on retail side, and also on the microfinance side. So based on both the combination of both the attributes from both the products, we would develop this score. So this is the basic underlying of around the framework of this score. And what is the objective of this is, and how it will help the whole ecosystem is, one, certainly this will enable lenders with further holistic underwriting with the solutions which will be enabled here through Grameen score. And this will expand the whole financial access, and it will bring more inclusivity, like more borrowers into the formal financial ecosystem. So this is the objective.
Yes.
Ma'am, can you share your screen in the put it in the presentation mode, because your slides are very small, not visible properly.
Is it possible to? Because I don't know. We are saying it's in a presentation. smaller size.
Slides.
I don't know how, now it's fine. Now it's fine.
So with this objective, we move forward. And then again, what is the framework of this Grameen score, like how it has been developed? So this is again from the advisory of RBI, like how we can develop it. So this TransUnion CIBIL's Grameen score, this will be utilizing data. How it will develop this? It will utilize data from the bureaus, which is from the consumer bureau, where we have our retail products, and microfinance bureau. So it will be combination of both. And the scoring model will be based on the rural borrower's loan profile, which is repayment track record, etc. And here for this loan products, again, like what is Grameen? One is, like Grameen is defined through the geography. So geography is like, if we look at the admin levels, it is like a state, district, taluka, pin code, and village. So here pin code has been taken as a standard geographical classification of Grameen. So here in India, if you look at, there are some 19,500 odd pin codes are there, which is classified across urban, semi-urban, and rural pin codes, we can call it. It's all clubbed together. So for the construct of Grameen score, here urban has been taken out of this framework. So only semi-urban and rural pin codes are taken into this classification. So that is one. And second is, since we talked about, it has combination of attributes from both the products, which is consumer retail plus microfinance. So this is how it is, like to summarize in a pictorial manner, if you look at this. So consumer bureau data plus microfinance bureau data. So now when we look at this consumer data, like there are certain products which has been taken into consideration. So there are around 14 products which we have considered for retail segment, retail plus including microfinance. So these are the Grameen products, which is mentioned at the bottom of this slide. So this is microfinance. Certainly JLG loans have gone into it, Kisan credit card, tractor loans, gold loan, CB loan, two-wheeler loan, commercial vehicle loan, two-wheeler loan, mudra loans, microfinance of all types, and then PSL, certain PSL priority sector lending loans into agriculture, small businesses, and others. That all 14 products has been taken into this whole construct of Grameen score as far as products are concerned. And then second is Suru classification. We call it semi-urban and rural pin codes, which is Suru pin codes. So this is the products and the borrowers scattered across Suru locations have been considered for this. So this is cross bureau attributes, which is from both the bureaus plus Suru location geographical classification. This is giving us the Grameen score. So basically, this is the framework and the basic construct of Grameen. So hope this slide is clear to all of you. Coming to again, like what is the range of this score, how it looks like. So this score for are like similar to our normal score, it's ranging between 300 to 900. So here again, higher the score, lower the risk is. And the score will be calculated for existing to credit customers, E2C customer we call it, where credit history is available across consumer plus microfinance products. And again, this model, how it has been developed is this will utilize algos from consumer plus microfinance bureau, and based on the cross combined attributes of both, this score will give us the range between 300 to 900. So here there are a few scenarios built, like we know that how we get this score. There are certain prerequisites for it. One is Suru pin codes, semi-urban and rural pin codes, which is, from the total pin codes, around 1,500 pin codes, urban pin codes are taken out. So rest all is known as Suru pin code. So that is one. And there are 14 product inquiries, products which we discussed. So this has gone into, and Suru pin codes, based on these attributes, we get the Grameen score. And one, if somebody wants to get the Grameen score, has to request for the delivery of Grameen score, which is to select that we want Grameen, and then based on this combination, Grameen score will be delivered. So here, like suppose borrower A is having some presence in the consumer, like some retail loans he has taken, and also microfinance loan has been taken. So here, and this product is a bundled product. So here we get, this will come in combination with our credit vision score. So CV score or NTC score in case no retail presence is there. So credit vision score will come, microfinance score will come, and Grameen score will come. So this is a combination one can get if the borrower has presence in both the bureaus. Like similarly, the second scenario where borrower B is having the presence in consumer score, and there is no microfinance presence, then we get score delivery will be like Credit Vision score, and Grameen score, since microfinance presence is not there. Likewise, vice versa, say borrower C, where there is no consumer presence plus microfinance presence is there. So we get microfinance score, there is no Credit Vision score, but NTC score we have, which is new to credit score, that will come along with the Grameen score in this case. So this is how it will work. And yes, as we discussed, this is the bundled product, and it will come along with the Credit Vision score or MFI score. So if you see how we talked about certain products which has gone into the construct of this Grameen score. So how this Grameen portfolio has been, performing in line with the overall credit growth. So if you look at again, Agri and KCC. So year-on-year growth is 4%, gold loan 33% growth, commercial vehicle 8%, microfinance loans, we know there has been degrowth as compared to previous year to the tune of 15%. Tractor loan, BLPL 24%, and two-wheeler loans, which is all part of the Grameen score, and this has been growing in line with the overall credit growth. So this portfolio certainly is growing, and Suru population, which we have considered. So the loans in Suru location is also growing in these products. So just understanding this slide, like how, the prime objective, as we discussed in the beginning, and also like how it all started, the agenda was to promote financial inclusion and bring more and more customers to the financial ecosystem, formal financial ecosystem. So here just one illustration we had shown here is like if we consider our typical CV score, Credit Vision score. So here, like based on the score and risk appetite of institution to institution, we'll have certain threshold like 650, 680 or 700 like that. So if it is a good score, then certainly it's a good profile. Higher the score, profile will be certainly good and strong. So we, the cases are underwritten based on that. And if the score is low, certainly we consider that as weak profile. And then weak profile, and then there are certain profiles NTC new to credit. So we see in the rural portfolio overall like 30 to 35%, and sometimes for some product 40% would be new to credit cases, which is -1 or 0 cases. So this is underserved population, we can say, in the current scheme of things. If we overlay that with the Grameen score, how this whole thing looks like. So here, like again, the same scenario where Credit Vision score is high to low. And then also we overlay that with Grameen score, which is low to high. So here, like if you see the red segment, so both the scores when are low, certainly it is high risk profile, and this is not to be considered. And the first one, if you see the Grameen score is low, but CV score is high, we call it consumer credit reliant segment, where somebody would have taken retail loans and have done really good. So this segment is again good. Where Grameen score plus CV score both are high, this is a very strong credit profile for us. Likewise, if Grameen score is high and CV score is low, so this segment was getting rejected earlier, or it might not be, considered, or if at all we consider with some deviation or something. So this is high risk profile. But here, if Grameen score is there and Grameen score is high, this is Grameen credit reliant customer, because this has combination of microfinance plus this in the Suru locations. So these borrowers would have done good in microfinance loans, so are displaying good repayment track record here. Sorry. So here they are displaying good credit worthiness, and on the basis of this visibility, these cases can be considered for underwriting, which earlier certainly we never had that, that visibility. So this is giving swap-in opportunity for more borrowers to be part of the financial lending process. Here also in NTC segment, if we see, like we have as a transition CIBIL, we have our NTC score, and this when overlaid with Grameen score, this certainly will give us a good profile and strong profile customers. So these cases also can be underwritten with confidence. Yeah, so moving ahead, like once this score is developed, we also check the risk rank ordering for this score. And here, this is giving a very good correlation with the bad rates. If you look at this x-axis, is these deciles are 10%. Each decile represents 10% of the population. And here the scores are ranging from 300 to 900. So towards 10 as we go, it is 900, and this extreme left is 300. If you look at the bad rates around when the scores are high, it is coming around 1.5 to 1.8%, which is a very strong correlation it is displaying with the bad rates. So this is the efficacy of the score. So it is giving us the comprehensive and focused solution for where we are leveraging both the data from consumer and microfinance credit data. And it is a tailor-made solution for semi-urban and rural borrowers. It's driving ultimately the overall objective of financial inclusion and more access to the rural borrowers, expansion of financial inclusion by bringing more borrowers to the ecosystem. And it will enable development of tailored loan products for the overall rural economy. So this is in brief, is giving us like what Grameen score is. Now we can talk about if in case questions are there and we want to talk more about it.
Thank you, ma'am. Thank you for the presentation. So now we move to the Q&A session. So as I can see in the chat box, I can see 2 questions. Do you want to take that? I request Mr. Kannan and Mr. Krishna to unmute themselves and ask the questions to the CIBIL team.
Hi everyone, this is Kannan from Innocent Bank. See, as you said that, I hope if I'm audible. As you said, this
Yes,
model is developed based on PIN code. If we understood correctly, that PIN code coverage is about 5-kilometer radius and covering up maybe 10 to 15 villages.
Yeah.
So, little curious to understand how effective this model works, because PIN code is very large in my view. So we have.
So I'll tell you, sir. Hi, I'm Rahul. I'm managing, or I have, I'm the product manager for the Grameen score. The way we have defined the Grameen or the definition of Grameen based on the PIN code is PIN codes are defined. The Suru classification has been defined based on the RBI itself. So RBI published the ATM master, and there are certain other publications are there based on which this whole list of curated PIN codes are decided. First thing is that. Second thing, we also discuss as a part of my TWG or technical working group with the RBI to define how we will build in the score, right? So because the Grameen score is a word, right? But how to define the Grameen, how to define what way to score the customer, right? That is where we also took the feedback from the from RBI, as well as we took the VOCs from the big banks like SBI. Then we took also from NABARD chairman and everyone, right? So we bring this consensus view that we should be defining it based on the rural pin codes, Suru pin codes, 19,000 pin codes, and along with it, we also focused on the products. The reason we focus on the product is predominantly the Grameen score is meant for the financial inclusion. And the way we define the 14 product, you look at those 14 products, those are all financially inclusion based products, right? So those are the way we define this whole cohort is to get the more balanced view about the behavior of these set of customers, right? While our CIBIL score is a very generic score that has a more weightages on my unsecured lending, and my metro behavior also becomes a very big part of it. Grameen score is predominantly bringing the nuances of the rural population and their credit behavior on the specific financial inclusion products. So that's the whole premise of the way we have developed this overall product offering.
And pin code, sir, that's the second smallest unit, as we mentioned, like village being the smallest, and then the pin code. So district again will become large and all that. So as per the advisory, pin code was
I'll tell you, yes, if we would have the village, I would be happy to make it the village as a more denominator rather than the pin code. But currently in our data submissions, we get the pin code as a separate, a separate column, and we get a feedback on the based on the consumer address. We also get the pin codes from the members separately. Hence, we know at a customer level which customer belong to the Suru location versus the metro location. So that becomes a the cleaner
Standard.
data to work with.
Anyhow, would like to understand more about this product. I will connect you guys separately.
Sure.
Sure.
So you can always reach out to your, the CIBIL representative because CIBIL representatives are working with you and your bank, right? Or write to us after the call. You can always write to us as well, right? So we can give you much more detailed about the score,
Right.
how you can utilize it, all any integration things that you want from our side, support from our side. We'll be more than happy to connect on that.
Sure, thank you.
To the other question, is model suitable for SHG JLG? See, if you ask me, the what Madam Nirmala Sitharaman, if you read what she presented, right, in the budget, she said including SHGs and all, right? When we started our discussion with the RBI or through the technical working group, the challenge with the SHG data inclusion is that we don't get a submission of SHGs, right? So we laid out this challenge to the RBI. RBI said that for the first phase, you go ahead with whatever data you have, right? Including the current MFI reporting of the JLGs and your retail loans reporting. You make the score based on that. And parallelly, we are working with the credit institutions as well as the RBI to get a submission for the SHG customers as well, but it will take some time. Once that comes in, definitely our score will be able to, will go for a revamp, or I would say the next version of the score, that is a phase two that to the RBI, that if we start getting the SHG data at a borrower level, then definitely our scorecard will include those set of customers as well. But for now, SHG is out of the purview of the score, only JLG, and that too at a customer level, because this is not a group score, this is at a customer level score. So any customer within the group will get scored within the Grameen score. So how Grameen score is different from my CIBIL score is CIBIL score is predominantly only looking at the retail loans and not looking at the MFI score. This is our first attempt to combine both the information which is Rahul Jain present in the Consumer Bureau having a home loan and also taking a microfinance loan in the Microfinance Bureau. The report will have all these 360-degree view along with the Grameen score, which takes care of their payment behavior across both consumer or the retail loans as well as the microfinance loans.
One doubt here about you mentioned around 14 types of loans, behavior in 14 types of loans are considered to arrive at this score. But in the report that you provide, any other type of loan this customer has would be also displayed, right?
Yes. Yes. So, sir, okay, I'll tell you this scorecard is based on these 14 products, which is we don't want to, give undue weightages to the unsecured lending part of it. That part of it, anyway, the overall, the way the customer behave is already taken care of in my CIBIL score. We wanted to give it a flavor which can differentiate over my CIBIL score today, right? So that's the reason we took, while scoring, yes, my weightages of the parameters are going to be based on how these customers have behaved across these 14 products. But when I deliver the report, it will contain it will have an impact of all the trade lines, including non-Grameen products as well. And my CIR will also have all the the trade lines. So there is no trade line that is going to be
Yes.
any exposure
Oh.
for a customer will be displayed both as a the retail product microfinance product exposure. Along with it, the Grameen score will also consider all the trade lines. But the weightages, because I'm making a scorecard, the scorecard weightages has been defined by these protein product, which is that it gives certain parameters more weightages because the behavior of customers for these 14 products is behaving that way, right? That is how it is built in.
Thank you. Just a follow-up on this. So when you displayed this 14 products, I saw that like a few of them are clubbed under the microfinance heading, and housing loan is one of that. But
Just show that slide. Only just put that slide on that particular slide.
Yeah.
That photo.
Is a normal housing loan or a loan against property considered it arriving at this score? That is the question.
No, so home loan, basically home loan we have kept out of the purview because home loan is a little bit not a financial inclusion, but more so it's a better of customers in that sense, right? So go to the slide number 3. Slide number 3.
Three. I think it's here.
You able to see this?
You have answered the question, so that was the thing. So you have kept it outside the normal housing loan.
Yes,
Okay.
normal housing loan, we have kept it out of it.
Okay.
Yeah.
PPT mode.
It's in the PPT mode, no?
No.
Okay.
125. 125.
Sure.
Share.
Just a second, sir. Yeah. Yeah. You able to see
Yeah.
the screen now?
Yeah, now better.
Thanks a lot.
Yeah.
Yeah. Now I mean, yeah. Okay.
Okay.
So location taken by customers based on metro area.
Will the Grameen score remain same for all anticipated one pin code? No. So Grameen score is not
It's a-
given at a given to a particular pin code. Okay, it's a borrower specific score. How the borrower has behaved on his trade lines, on performance behavior in terms of the repayment behavior, how much longer the customer has been paying off. Those kind of parameters has gone into creating this scorecard. In case of NTC, there are two scenarios. One is pure NTC, which is the first time the borrower is coming in, which doesn't have any history. So that's where we are also providing the NTC score to cater to that. There is another segment of NTC, which is earlier in my CIBIL report, the customer is NTC because he doesn't have that this customer is having the MFI trade line. So now, because Grameen score takes into consideration both microfinance exposure as well as the consumer exposure, these kind of customers will get a proper Grameen score. So no, the score models, I would rather say the framework is going to be same across the other CIC's framework. I'm saying because overall guidelines are similarly that has gone to all the bureaus, but the way we construct our score and the scoring methodology is going to be different from other CIC and vice versa.
But again, even though the methodology is different, the bad rate for a particular score would be same across the bureaus, right?
No. So
No,
it
that
depends
will
on
also-
the bell curve, right? So the way we are considering the our segment in terms of our development sample, right, is different, maybe different from other CICs. They have what they have taken the development sample and what products they have considered, what population they have considered. So that's the reason it may be different. I'm not saying it will be, but it may be different for any. And that is true that yes, the scores are between 300 to 900, but at any point or any score cutoffs, the bad rates are going to be different for each bureau, right? Because of the bell curve in terms of the overall population distribution within the scores.
Okay. Thank you.
Any other questions?
I just want to ask one question. Has this been already pilot tested with the borrowers of microfinance institutions?
What do you mean by pilot tested?
Meaning, hypothetically, I'm saying that if I have a customer, Shanti Devi, who has been repaying me, diligently without any default, and she is in my second cycle, third cycle, if I apply this framework, her score comes low. How does that work?
I'm not sure why the score would come low. The
Okay.
reason being, if she's paying off well, then definitely those repayment behavior will reflect in the score as well.
So that's what I'm asking. Has this pilot testing been done?
So this has been done in the when I develop any scorecard, right? This kind of testing is the predominantly that how the risk separation is happening, right? When I say the customer is good, right? Do my score model also reflect the same, right?
That's
How
what
do
I'm.
we do that? Which is the development sample, we develop the score, but we also test it in the out of time period, right? So this out of time period also shows that yes, the score is able to differentiate between the good and the bad.
No, I'm not sure I got your answer. I'm simply asking on the existing MFI clients, has this scorecard been applied, and have you found any contradiction, or it has been, to the zero error kind of a thing?
I won't say zero error, but I would rather say when we look at the overall microfinance portfolio, yes, the score is less rank ordering.
Okay.
But we would like to work with you and your team as well to see that whether this score is holding for your set of customers, we can work out with you separately if you want to look at your origination, how they are performing on this score.
Yeah, that's okay, because I feel it's a very useful initiative and a very need of the hour, because every client we are sourcing, though they may be part of the JLG, but it's all individual lending in some sense too. And screening is happening at the bureau level now. The screening can happen with the scorecard. It's as simple as that. But my only concern, which again is coming to my mind, that if I have Shanti Devi, who has been with us for 3 years or third cycle or fourth cycle, and her bureau is okay, but with the scorecard, if she get eliminated, her rejection comes. How do we deal with those kind of scenario? I'm sure there'll be an R&D stage, and there'll be some scope for learning from these
That
experiences.
is, sir, at a broader level, yes, the score is risk rank ordering for both consumer only and microfinance only set of customers, right? Because this Shanti Devi will fall into the microfinance only segment, right? So score is risk rank ordering on that as well. But we would like to work with you because the expectations that, the how we are pitching this score is going to be the add-on, or I would rather say complement my CIBIL score today. So that is given that she's only part of the microfinance bureau, definitely in CIBIL score, she will be a
No,
part
but
of.
she might have taken consumer loans. Now, the 14 product you have shown,
Yeah.
she must
No,
be
no,
a borrower to any of those products.
not necessarily 14 product if she take it or not, because my modeling will take all the products,
Yeah,
right?
yeah. But maybe she has taken microfinance loan and one of the consumer loan. Just two products basically.
I'm saying ki either of the two,
Yeah.
which is either MFI only or consumer plus MFI. The
Mm.
score what we have seen is performing well, but nonetheless, we can work with you in terms of your origination, how is risk rank ordering, whether you are satisfied with the score performance and all that. The score which you are categorizing in your application score is higher. The score is also giving you the high, or does it give you a low score for you to make an assessment of the cutoffs that you want to keep, as well as the score is risk rank ordering for your portfolio or not.
Sure. And I'm sure you're going to share the cost modeling for this. This
Yes.
won't be free. Huh? Is it free?
No. So it is POC. So currently, all the lenders, we have given this as a free offering. The in the web, the members have started taking it as well, right? They are taking the Grameen score options, and they are getting the scores as well. From the integration perspective, also it's available. If you want API integration, that is also available. But yes, for next 1 month or so, this code is free. You can at the way you pull the CIBIL report today, you can use the same inquiry page to also have Grameen score option to get the Grameen score as well.
Right. And we'll show you how we can get it also. So we'll go back to the same presentation.
Yeah.
1 second. ये था ना, ये वाला, right? This one. So presentation mode. Yeah. So that web delivery we can show.
So if you look at the screen, sir, so this is our current inquiry page, right? So in the inquiry page, the first ask is, as I mentioned, that to get this score, you need 3 conditions, as Dolly also mentioned. First, the pin code. Pin code need to be Suru pin code. Once you input these details, which are anyway, these details, 5 tokens are required. Along with it, if you look at the top corner, right? So this is include Grameen score. This is the checkbox which enable or disable you whether you want a Grameen score or not. Once you select that, then your automatically the inquiry purpose are going to be the 14 Grameen products, because currently we are only giving out this offering, giving out the Grameen score for the priority sector products, which is including these 14 products. And once you click the submit, then then you, as a report, you will get this kind of a report, which include both credit vision score as well as the Grameen score, right? So MFI score, it's an optional score, whether you want it or not, but credit vision score, if it is NTC on the retail side, then it will be a NTC score, and the Grameen score will be there. So that is how the delivery or the report will look like.
So does it mean that this Grameen credit score, Grameen score, is a comprehensive picture about the borrower, or his or her behavior from all these 14 products of loans they have availed?
No.
Yes.
So it is not across, not only 14, it is across all the product types.
I didn't understand.
So 14 product is how we have made the score, which is how on what product we have selected the parameters, right? In equation, there are parameters. The parameters are defined by these 14 product, how the customers has behaved once they availed these 14 product, just based on that. Example being total number of delinquent trade. That becomes a very important parameters from these customers, from the Suru, their behavior on these 14 products, right? When I say total number of delinquent trades, right? But when I run this scorecard, it will take into the trade lines which has the delinquency behavior, including your retail home loan, unsecured lending loans as well, a personal loan, consumer durable loan, everything cut across, microfinance loan, retail loan, any loan. Total number of delinquent trades will take into account all the trade lines, which is a part of your report, right? So that is how the overall the way the Grameen score is built.
So it will be a sum total of all the credit lines you are saying.
Yes. Yes.
Okay.
Then why are you bringing up these 14 credit lines separately?
Okay.
If you are aggregating all these things and you are doing your algorithm on the basis of all the parameters, then why especially these 14 are coming up?
So 14 are our conscious decision to make us when I select the sample, right? For developing any scorecard, I have to select a sample. The way I have selected a sample is the Suru pin code. The behavior of these customers are going to be different from the metro customers, right? The same way I have also incorporated the customers who have opened any loan account on the development sample within the development sample on these 14 products, because these are my financially inclusion products, right? When I use this as a sample and I utilize my all the parameter, I have 3000 parameter, 3000 plus parameters available or algorithms available in my bureau. When I look at it, these customer behavior across these products, across this Suru location, these will throw out some parameters which are significant to differentiate the good from the bad, right? But basis the performance of this set of segment, right? That is to define the way the parameters are getting selected. Okay, but parameters takes into account all the trade lines, but the weightages of the parameters is what is differentiating this product from my CIBIL score. Otherwise CIBIL score is the same. You will come and say that what are you doing different in the Grameen score versus what you have today in the CIBIL score. So these are the nuances or the segmented approach we have taken from the Grameen score.
So this will also include the microfinance score also, isn't it?
Yes,
Yes, sir,
yes,
yes.
yes. Microfinance trade lines, their behaviors are also included into the Grameen score. And within the report also, you will get both consumer as well as MFI trade line within the single report. So today in the consumer report, you generally get only the consumer trade lines, and along with it, you get a CIBIL score. This is the first attempt to combine the report and give you the consumer and MFI trade line, along with it, the Grameen score.
So here in this case, you are showing that 595, 580, and 634. 595 is the CV score. Is
Yes.
that basically consumer
It's a CIBIL score.
Okay. And 580 is the microfinance score. Then how did that change of score came in the Grameen score number?
So first of all, this is a sample. So just for an illustration
Okay,
purpose.
okay. It may
Right?
not be a
But there would be a difference depending, because every equation has a different parameters going into it and the different weightages of those parameters. So those are the things or nuances of each score.
No, sorry, if I can intervene. I think Gigi sir brought the same thing which is bothering on the screen, that Grameen score has come highest and credit score has come, which is very different from the Grameen score. Now, I have three, scorecards available in front of me. My credit decisioning will be based on what? And of course, these are above 500, so that there. But if there are major contradictions, how do we deal with that? Because is Grameen score going to be the final benchmarks for credit decisioning to decide whether I extend loan to my member or not, or whether it is going to be credit bureau, or is it going to be my MFI score?
So that is what we work with you to get an understanding of your risk parameters or risk behaviors, or the what we call it as a risk range that you work with, and what are the combination of the scores that works best for you as per your policy, right? Each member have their own set of weightages or own set of the originations that they do, right? Some are microfinance heavy, some are consumer heavy, some are retail metro heavy. So everybody has their own set of originations or underwriting principles, right? What we generally call it out from the Grameen score usage is it's an overlay of credits, my CIBIL score, right? It's an complementing my CIBIL score, which is to say, let's say the CIBIL score is low, right? But if the Grameen score is, let's say, come high, which is in most of the cases both are going to be in correlation, but the way we need to read it is that if I look at it, that Grameen score is high, it can be predominantly due to the parameters that goes into the Grameen score, which is that the customer is performing better on the let's say microfinance side of the loan, right? So then the lender has a decision to make, that even though the customer is not doing a good performance, or some way in some trade line, or some consumer trade line is not doing, has been doing well, but in your financial inclusion products like microfinance or agri products, he's doing well. Right now it is up to the lender to make a decision in terms of, along with the CIBIL score, what additional cutoffs I want to take it to include to increase my base, right? Which is even the lower CIBIL score of, let's say, less 680 or something, right? If I get a higher Grameen score, then definitely I should today, if it is getting rejected, is there a way using the Grameen score I can I can increase my lending?
Yeah.
So those are the things generally we are working with the lenders on.
And so this is also clear from this table actually. So the scenario where somebody has taken, like how Rahul elaborated, is somebody has taken, for example, KCC loans or crop loans, and crop loans he has not performed well because of various reasons. But in microfinance loan, he has been performing. His RTR is really good for last 3 years. Let's say year on year, his performance RTR is in front of us, and he is an excellent ETC track record is having. So that visibility we have. Like this scenario, for example, where Grameen is high, and then this one is CV score is low. So here this segment, which was earlier getting rejected as weak profile, we still have this retail credit land profile. So that visibility you'll have while underwriting.
One more last question.
My doubt is, in the given sample, you have given a score of CV score of 595, and the MFI score, it was worse, 580. The Grameen score has improved to 634. I think it's little liberal scoring method is given in Grameen score, I feel. That's what I feel.
So, sir, this is not the way that was a sample, right?
But
It is it's for the illustration purpose. I should have put in the better illustration, but nonetheless,
Yeah.
not to create any controversy, but sir, it's not about liberal, right? It is about the bad rate. At what bad rate your comfort lies, right? Which is, if the combination of the CIBIL score and the Grameen score give you a comfort that this is my bad rate of 3 to 5%, and within the 3 to 5%, I can, using the Grameen score and the CIBIL score, I can include more customers, right? Because now I have additional parameter of Grameen score, which was not there earlier. Earlier it was only CIBIL score, right? Now I can lend more, right?
Yeah.
Within the the range of my bad scores, which I am comfortable with, right? That is how we should be, or generally we prescribe the member banks to use the score with.
Okay.
One more question from my side, last one. You also said that no to credit, you are giving a score, isn't it? NDC score.
Yeah.
How do you arrive at that?
So can you repeat your question, sir?
NTC score, how you arrive?
NDC score, how do you arrive at the NDC score?
So the way we have arrived at the NTC score is that generally NTC score doesn't have any data. Okay, so you're right in a way that we don't have any credit history, nothing is there, right? What we look at, how we have defined the NTC score on the lookalike model. When I say lookalike model, it is based on the information given in the at the time of inquiry, which takes care of your, the age profile, your geographical profile, right? The what loan you are seeking for. So all these parameter, including when we go back in the history and see that the customers who have applied for first time, in this kind of a segment, right? 18 to, let's say, 21 age, applying for a KCC, coming from a Suru location, how this set of customers, right? If I go back in time, because I have historical data, how this segment has performed, and that's how we have then given them the kind of a score. This score is not 300 to 900, it is between 101 to 200, but the higher the score, lower the risk. But that is how it is, not a your traditional score. It's based on the lookalike kind of a score. The way, just to give you a correlation to it, the way currently the banks do the blacklisted pin codes kind of a thing, right? Similar to it, but more so nuanced approach in terms of there are other parameters that goes into the NDC score.
Right. Thank you. Any other questions from anybody?
Thank you, sir.
Naveen, you are asking some question? No. Okay.
Yeah, I was asking one question, but
Yeah.
later on it was clarified. My question was that what the in the slide number 3, what the trade line they have shown is
Yeah.
like MFI,
That's-
Agri, KCC, all those things are coming in the is like what the CCR we are getting for our customers. Okay, so how this score will be different from the general what a score we get from any CCR we are taking from any credit bureau. Okay, so but later on they explained that the weightage for this 14 product is something different and other products are different.
So,
That's how
sir,
the difference is coming.
assume it that it's your kind of a custom score or application score that you have very specific for your lending purposes, right? So this is kind of a score very specific for the Grameen score, very specific for the rural population, very specific for the financially inclusion products, combination of these and which define the parameters that goes into the score, right? Otherwise, what happens is if we would not have used these combination, right, we would have ended up with the CIBIL score only, right?
Okay.
So this is a customized score which give the much sharper lift compared to my over my CIBIL score.
One more question here. Means like generally, if you see, people tend to repay their secured loan and they try to bypass the unsecured loan. Generally, in general, means like the human behavior is like that. Okay, so suppose if a customer, we are means like most of the people who are in the call is dealing with the unsecured loan mostly. Okay, so suppose the score is getting more influenced by this secured loan and we are into the unsecured loan, how you are going to means like balance that with your Grameen score?
So if you look at it, we look at it at a borrower level. Okay, so let's say I give you an example of total number of delinquent rates, right? If the delinquency happens on the personal loan or if the delinquency happens on the home loan, it is a delinquent customer for me,
Yeah.
right? The scores are going to get impacted, right? But there are other parameters. Let's say I say number of defaults, right? So number of default of the customer who has multiple default compared to a customer who has only one default, definitely the score will be lower for a customer who has a multiple default and is the tendency of his repayment are not good compared to one who has recently defaulted on one single loan, right? So all these parameters are at the calculation happen at a borrower level, which takes care of both unsecured as well as secured products.
Mhm. Okay. Yeah, that's all from my side.
So there is one question on the whether it has a regulatory clearance. The whole scorecard has been communicated or to both CIs as well as CICs to develop this score and CIs to consume this score, right? So this has a regulatory blessing or regulatory even push that the lenders should use this or should start using this code for their routing. There is another DFS has also been pushing, and there has been letters that has gone to the CEOs and the at that level of the scheduled banks and RRBs cooperatives and the industry bodies as well, right? To increase or promote the usage of the Grameen score, because the Grameen, this is not the score that has been made by individual CICs on their own. This has been pushed from the overall the discussion that happened with the RBI, and RBI enforced this on CICs to make it by 30th September. So from 1st October, it is available to all the CIs to consume.
In fact, I wanted to add that in the end, because already there is a communication from DFS which has been circulated to all the MFIs that they should take into account of Grameen credit score as part of their assessment,
Yes.
loan assessment process.
Yes.
So
Yes.
I would request all the people sitting here, all the MFI sitting here, to please take Grameen score as one of your loan assessment tool henceforth.
4377 KL32W Jupiter 117 battery complaint.
I didn't understood your question. Your voice wasn't clear, sir.
Were you asking some question, HK?
I think
Yeah,
I think-
actually, yes. Actually, the query is like the household income will be mentioned. Now we will be getting the household income for this MFI loan. So similar way, the same appears will be in the Grameen report, or can you please explain that? For just understanding purpose, I am asking actually.
So, household income will not be there because currently what we have done is it is currently my CIBIL report, right? Today, what we have done is we have mapped the microfinance related fields to my CIBIL format so that the consumption of my existing customers, right, typically, right, will be coming up with this, the overall, including all the fields of microfinance and the consumers. But as of now, what we have done is we have provided microfinance related information in the consumer format, and hence because consumer doesn't have a household income field available in the bureau, this is not a part of my report as of now.
Okay, but in future, because the thing is, we will be comparing the overall what are all the loans given by the competitors and what are the income that has been the recent loans which the customer has taken. So that we, for analytical purpose, we'll be using that. For this Grameen report, we won't be having that kind of a field in that.
Yeah.
Oh, correct, no? Okay.
Yes.
Okay, fine. Okay, thank you.
We already captured in the Equifax Hammer report in this household income.
Once again,
We already capturing the data, na? Household income.
So that is a part of the microfinance bureau. Yes, this income is available as a microfinance report. But what we have done is that given that the consumer report, which is consumed by the majority of my integrations that we have, right? We didn't want to disrupt their flow. So currently, because there are APIs also there that we already have with our member banks, right? So we have kept it for now. It is into the similar structure as my consumer report. So within the consumer report, whatever fields are there, right, we have mapped the catalog values within the same for microfinance type of loans, and hence it is aligned to my consumer report, not as an overall microfinance report. So microfinance has multiple other things or edit parameters are there. We are in plan, or we are trying to get that information as well, but that's right now what we have focused on is to give this information in there, in whatever with the CIBIL, the members are there, they are used to certain report structure, they are used to certain API structure. We have provided, or we have tried to provide the information in the same structure.
Fair enough. The implemented part, we already run the family income. So this report will be implemented now. The parallelly both are report will be running. That's the reason I asked you. Is it available as a consult report?
No, got it, sir.
Yeah.
Thank you, Team CIBIL, for clarifying the queries during this Q&A session. As they have already mentioned, like you can get right back to us, and we will work on that. So with that, like I'll request Gigi sir to deliver the closing remark.
And I think this was a very useful session for all of us, I'm sure. And for me, it was a first exposure, a full session on what Grameen credit score. I had been listening to in between here and there, but it was a full session I could hear. So definitely, it's a good initiative, I'm sure, because India being majorly dominated by the rural sector, with almost 70% of the people still in the rural areas. And many of them do not have the right kind of credit history, or they do not have the right kind of credit credentials. So this kind of an initiative is definitely going to help. And as it was already mentioned, as the days, it's only a beginning. Probably as the days pass on, things will become better and better, especially with bringing SSG data and all, things can look much better. So we hope, and as Akul sir was also said, that this needs testing. So this is only, now it's a proof of concept stage. Yeah, the product is ready. It is a proof of concept stage. We need to work, test it and see how best it is working, and what kind of deficiencies or what kind of improvement needed for this. Accordingly, as the time goes on, I'm sure this will come out as a very good tool for all of us to consider the rural masses for the banking finance or the credit. So thank you so much, and we hope to hear more from this. Thank you, and thank you for everyone for joining us, and thank you, CIBIL, for sparing your time. Thank you very much.
Thank you so much.
Thank you, sir.
Thank you, everyone. Thank you.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you. Sir, 5 മണിക്ക്